I have finally closed this trade with around 13 to 14% profit. I should not have sold this stock, but sometimes the market forces you to sell a particular stock, especially if you want to offset or cover the losses on your some other stocks. That happens, and you have to take that from the market. So let me explain this trade. I had already made a video on this earlier while I was in the trade somewhere here. And now on this candle, I have finally closed the trade. So you see roughly I have around, this is my buy point, the yellow line, and roughly 15%. But I ended up selling somewhere here around 14%, if I remember correctly. So around 13 to 14% profit on this trade. So let me go back to why I took the trade, how I kept moving my stop loss up at logical levels, and how I managed the trade ultimately. So if I look at the moving averages, see the blue, the green, the red, the 50-day, the 150-day, the 200-day, all are moving up. The price is moving up. It's a nice stage 2 uptrending stock. Then you have the base here. So if I draw the base, see this is 0.1, 0.2, 0.3, 0.4, and 0.5. So there are 5 points in the base, 2 contractions in the base, minimum 10 candles in the base, which is 2 weeks of consolidation. So those are all the criteria that I'm looking for before buying a stock. 10 candles in the base, more than 4 points in the base, and the blue, green, red. And I place the order at point number 3. So I enter here with a 2.5% position. Next day, it is testing the yellow line, closes up. Next day, it creates a rising window. So now my mental stop loss is here. If I draw a line here, see, between these two candles, there is a rising window. So the high of this candle is the lower line of the rising window. So I put my mental stop loss here. Before that, my mental stop loss was here at point number, sorry, at point number 4 here. But since this is below my 8% stop loss, you can assume that my mental stop loss was at the red line itself. Okay. Then as it started to move up at this rising window, I kept my mental stop loss, went up, did not sell, came down, did not sell because this was low volume selling. Low volume selling means institutions are not selling the stock. Then between these two candles, there is another rising window if you observe carefully. Okay, so I moved my mental stop loss here. Mental stop loss means if the price closes below that level, I'm going to sell the stock. So then why did I sell here? If you see the moving averages, it is comfortably above the 8-day exponential, comfortably above the 21-day exponential, and of course above the blue, green, red. So what is the reason I sold the stock? See, on this day, there were 4 more stocks in my portfolio which were down 3%. So I am losing 3% on each stock, which is like 12%. So I had to sell one stock to cover that loss. If I had not sold those 4 stocks, that 12% loss could have expanded to 20 or 25% loss, right? I wanted to cut that loss there. So if I'm booking 12% loss on a 2.5% position size on an average on all those 4 stocks, I need to sell another profitable stock to cover for that loss. Otherwise, you know what will happen? If I sell 4 stocks, book 12% loss, then if I don't sell this and if this comes down, comes to my yellow line, okay, I don't make any gains here. So that 12% loss will start eating into my realized gains of other stocks which I had sold. I have made the videos where I made those profits, the realized gains. So in order to avoid losing my realized gain, I thought, okay, let me adjust my unrealized gain with my unrealized losses. Okay, so sometimes you might have to sell a stock just to offset the risk that you are sitting on. Okay. So normally what people say is you sell after it closes below the orange line, or you sell after it closes below the purple line. But your selling decision is really not dependent on the chart itself. Your selling decision should also factor in what are other stocks in your portfolio doing. If you are losing money on 10 different stocks, and if two, three stocks are making money, and if you are not selling them, you are sitting on huge risk. And if you have not been trading for a long time, you will not understand what I'm saying. But if you have been trading for a long time, you will know exactly what I'm saying. So sometimes the market forces you to sell a stock. Now there was no reason. The stock was comfortably above my buy price. I bought it at 350. Now it is at 400 roughly. So that's a nice gain. And there is no reason why the stock should not continue to go up. See, this is low volume selling. So the institutions are not selling. So people are still holding on to the stock. This still has a lot of potential. So it's a fantastic purchase. But sometimes you have to give it up. You cannot be emotionally tied to a stock. So that's the game here. I hope you understood this trade. If you have any doubt or questions, just let me know in the comments section. Coming to this base, if you look at this base, it's not a perfect base. Okay, if I draw this base, see, there is hardly any price action in the upper quarter. I see good consolidation in the second quarter of the base. Okay, the red line is the midpoint of the base. So at least in the second quarter, I see decent amount of consolidation. No candle has closed below the second quarter after zero point 0.2. After 0.2, there is not a single candle which has closed below the lower half of the lower half of the base. That's a good sign. Okay. And decent trade. There were only 4 points in this base, only two contractions. I would have wanted the price to come down after this candle, and then this would have become my buy point. The high of this candle would have become my next buy point. That would have been even more profitable. I would have made 2-3% extra. So I would have got out at roughly say around 17-18% return from this. Okay, provided I sold here. I could still hold on to the stock, no problem. I could buy it back tomorrow. But that would not be wise. I have already booked losses and I've already booked profits. Both are realized and it's all neutralized. Sometimes you have to neutralize your losses so that you can protect your previously realized gains. This is what professional trading is all about. Professional trading is not about catching the high, because you never know what high could be. Right now the stock is at 409 rupees. It could go to 1,000 in the next 1 year. But do we know that? Do I know it right now? I don't know what is going to happen. It could even crash to 200. Do we know that? I don't know. So what do I do in the moment? So in the moment, I sell. I book my profit, I book my losses, I neutralize my losses, protect my realized gains, and in fact, add to my realized gains. The money I made here is more than my losses on 4 stocks combined. Okay. So that is what, they talk about reward to risk concept. This is what reward to risk principle is all about. One stock is able to cover the losses that you are making on 3 other trades. Okay, so limiting losses, riding your profitable stocks and selling them at the right time. Sometimes the market forces you to sell, but take it as it comes. Okay, I hope you learned from this. Let me know in the comment section. Thank you so much.